today.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 311. NASDAQ is up 18. S&P's up 22. Gold contract got a bid out here, folks, up $25, trading $18.43 an ounce. You get silver up $1.39, $21.59 an ounce. Light sweet crude also up $1.50. $42.31 a barrel, notes and bonds. We get the 10-year right now up 3 ticks, trading 139.16. The 30-year up 10 at 180.11. And King Dollar, folks, is giving it up. King Dollar is down right now at 237 ticks, 95.595. The euro's at 114. The yen is out here at a price point of 107.03, and the British pound is at 127 to 1 U.S. dollar. Tom O'Brien, what's going on?
Man, markets are going up, man. NASDAQ within a half a point all-time highs. And how about that gold and silver and oil, man? Where do you start in a market like this where it's just action everywhere? Action everywhere in a monster way. This dollar is going to be a whole different ball game. That's the bottom line. We'll see where this baby shakes out. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures. Great program. If you haven't test driven yet, the Think or Swim platform, real easy to do. You're sitting on the website, hit the banner, bring it up to allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Tuesday.
Happy
Guys,
Tuesday.
It's earnings season. A lot of good earnings going on right now. There's a really interesting move in the relationships between the three major indices and the NASDAQ. You know, we've been talking, you guys have been talking for weeks now about the divergence between the NASDAQ index and the other, especially the Russell. And here it comes. Russell up 1.8% right now. NASDAQ down 0.1%. So maybe we're starting to finally see that rotation out of NASDAQ and into some of these other indices. It's worth watching, though, that's for sure.
No, you know, it's pretty amazing, Kevin, when you take a look at these the NQs. I mean, how do you go up to the high and just miss it by a half a point, right?
Right.
We had 11,058.
And coming off a day where the new prices out in Amazon, $3,800 price target from Goldman Sachs yesterday.
I know.
Good Lord.
The stat on Bezos and his ex-wife are just phenomenal, man. I mean, yesterday, folks, was the largest day that I guess anyone, bottom line, had an acceleration. I think it was 17 or 18 billion that he put into.
It probably was. He's got 55 million shares, I think, and I think it was up like $250. It's not bad when you got, you know.
And here's the problem. The case that this analyst, Heather Bellini, made for Amazon, it's hard to argue with, right?
Yeah.
What does Amazon do, and what is this current economy doing right now? It's all about online shopping and cloud computing, right? Well, that's what that's her justification for Amazon. And frankly, it's hard to argue with at least the positive tone around Amazon. But I mean, 3,800, look out.
They have so much business. I don't know if you saw, they actually moved back their Prime Day deal that's usually in July. So that's probably maybe going to be in October. So they're going to come into the holiday season with Prime Day in October, sales starting at Thanksgiving, Christmas in December. And they just have so much business right now. They said, hold on, let's push back Prime Day, man, because we can barely keep up with how much business we're doing.
Yeah.
Can you believe that? I mean, and think about it, guys. We got Snap earnings today after the bell. We're going to focus on that today on Fast Market. But with everything going on with Facebook, right, they get an upgrade yesterday and a price target raise. So these NASDAQ stocks are just absolutely in favor versus I don't know. You tell me every other stock in the world, basically,
No.
is where the people are focusing. So that'll change eventually, but I don't know when. Although we're kind of witnessing a little bit NASDAQ selling off here as we're sitting on the air. So they're rotating. It looks like right now they're rotating.
Yeah. You know, the Facebook deal, Kevin and Tom, is pretty amazing. I mean, because they're getting hit from everywhere. But
Yes.
the bottom line is that it's not moving the stock. And, folks, if you advertise at all on Facebook, I can understand why it's not moving, because the bottom line is that whether you like it or don't like it, the bottom line is that Facebook can pick you apart in a second and tell you what zip code you're in, how old you are, what sex you are, what do you like?
What are you eating for breakfast?
Exactly. And so,
Seriously?
I mean, that's why that thing won't move. I mean, these big advertisers say, yeah, I'm going to pull off. Well, guess what? I bet they're going to we'll see whether it's 30 days or 90 days they're pulling off because,
Yeah, right. Do you notice none of them are doing it permanently?
Yes.
They're all doing a little break, and they're basically all, coming back, not staying too far. They've all got massive exposure on Facebook, and the one thing where Facebook's not getting hit in the pocketbook, other than fines and penalties like that. I mean, Facebook, you look, and some of the names that of advertisers that are pausing Facebook are some pretty high-profile names, but there's millions of advertisers on Facebook.
Exactly.
You're talking about 1 or 2 dozen. There's millions of people advertising on Facebook. And,
Yes.
and it's the most targeted advertising you could ever do. But, boy, the noise around Facebook, it's a constant barrage of negative noise around this stock.
And,
But all they do is make money, guys.
No, just saying, Kevin, let's picture, you have the monster companies, folks, no doubt that they're the largest advertisers. They're basically pulling back. But the bottom line is that you got Kevin, you get Tom, and you got me, you get smaller advertisers that are going to continue spending, whether it's 500, 800, whatever that is, okay, and it's by the millions, man. I mean, so.
And you got to. I mean, Zuckerberg alone, he's pushing now $90 billion, almost. He's approaching $100 billion, and those fines are like $5 billion, man. We talk about that. That's not a bad fine when the CEO himself is building a $100 billion empire, man.
Tommy, I think when they fine him $5 billion, I think he takes that out of his pocket, pays it cash.
Yeah, he
I think
says,
he's got
"Thank
that much
you.
on him."
I'll make that investment every day, all day, because you don't know what I just returned on that $5 billion fine I just paid." Exactly, right?
Yeah, there's no doubt. It's like the bank, fines. It's just part of doing business now. That's the bottom line,
and I come from a different idea of what business is. And I appreciate Mark Zuckerberg for no other reason than he doesn't bow to the heckler's veto, right? He doesn't listen to the noise. He stays on the path that he set. Right or wrong, you can make an argument, but he stays with his game plan, and it's working, guys.
Yeah, no, there's no doubt.
What was that movie about Facebook? It was a good one, and how ruthless he was, keeping all those shares.
Yeah.
He's got all that voting power, man.
That's all people should do is go watch that movie, and then you know what you're dealing with, man.
Yeah, I totally.
The social network.
Exactly.
Perfect.
Exactly. Kevin, you have a great one, safe one. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 288. NASDAQ is down 8. S&Ps are up 17. Coming right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow. Dow's up 283. NASDAQ is up 11. S&Ps are up 19. And, Tom, we're going to go over to this dollar. So, folks, this dollar is getting some momentum on the way down out here. Bottom line is down 326 right now, 95.510. Your swing point here is 95.736, so you're blowing it away. So, bottom line, we're on our way right now down to this 94.650. And, of course,
I think we may need your chart in the den if you get a moment, too.
Cool. Oh, sorry, man. Okay, let's see. Here. Okay, let's do that again. So let me see. Where am I?
I'm sure they had us in Tiger TV, but we'll get there.
So, and if we go over to the silver market, folks, so this is pretty amazing.
It is.
Silver's up $1.36. So in 3 days, we've gone from 1935 to 2156.
I mean, you've almost doubled since the March lows, man.
It's intense. And the silver stocks, folks, are on fire, man. I mean, they are on fire. And if we see an actual breakdown of this dollar, what I mean by a breakdown, folks, is this, is that the dollar is still really high. I mean, you know, the last low that we had, a big low, was 88. We're at 95, 481.
Yeah.
But what happens in currency is that we're going after the lowest swing point now. We broke one of them, you're going after the lower one. As we go after the lower one, if that blows that away quick, you will get to that 88 way too quick for the market. And that's when you're going to see an explosion. Well, we already have the explosion in the metals. But it will continue. So
sure.
This is going to be wild. And the aspect, let's go look at that oil market, because what is happening, what I'm looking for is clues right now that inflation is actually kicking in. And it would be the commodity market that would be basically, yeah, see, this is getting juice, man. Oh,
yeah. I mean, this is a critical jump it just had, man. Yeah. I mean, we were at that low that we've been talking about, that huge gap from March. 41.05 is the low I have on there. And we were just teetering since you go back to June 8th. We started, the high was $40.44. We kind of, first time we're up at that level. June 23rd, we reached 41.63. We're back up there around July 8th, and then we just jump right over that level, man.
It's a big number, man. It's a big number.
Definitely.
So, Tom, how about
just before we jump away and crude real quick, it's like, how can you tell me the price of oil is more expensive than it was on March 6th before the Saudis started an epic price battle in the middle of a raging world pandemic? We're like, you know what? Oil's more expensive than it was that day, even though we opened at like $27 on the following Monday.
Yes.
It's just one of those cool things going on in the market right now.
It definitely is, man. And that's where the aspect of that, if inflation is catching a bid, what you get, folks, is that the dollar will continue to lower, so that when the aspect of, oil's trading in dollars, gold's trading in dollars, silver's trading in dollars for basically the world markets. And as the dollar gets lower, the bottom line is that if the commodity market sniffs out that we got inflation going, you're going to see some.
Definitely.
You're going to see some action that you haven't seen.
It's the first thing I thought of before I even saw the dollar index. When I woke up this morning and I looked as the markets are just kind of trading, and then gold's taking off, silver's taking off, right? Oil's taking off. It's like, what's happening to the dollar, man? It's like every commodity is just skyrocketing as the market's skyrocketing too. So that matters, right? But big moves in the commodities, gold, silver, especially silver. Crude too, though. I mean, if it wasn't for the moves in gold and silver, today would be like, wow, look at this move in crude. We're back above those levels.
That's right.
We're making new highs. We're all the way back to early March. We're before the Saudi price ridiculous battle. I mean, it's just everything.
Yeah, there's no doubt. And if we go over and we take a look at the euro, you're going to see that the euro basically is launching right now. It's going after the high from 5 months ago, which is 114.49. Actually, look at this. We're at 114.78.
That's pretty cool, man.
So it's taking it out. It's just taking it out, man. And then the pound hasn't backed off at all. The pound was still going. The euro, folks, was flat this morning, but the pound was already taken off. Now it's really taken off, man. We're up 66 ticks. This is going after the 128.13, and you're at 127. And then you get the trifecta out here for the metals market, because what you also have is you have the yen, the Japanese yen, that is going down in price. That means that's getting stronger against the U.S. dollar.
Sure.
And this is, bottom line, going after the lower end of consolidation, which is 106.07, and we're at 106.87 right now. So going to be pretty wild. Hey, how about that NASDAQ, though, that misses it by half a point, right? Isn't that
pretty
crazy?
Cool, right? And that can't be that can't be the end of the story, right?
I know.
They can't cut to black and roll the credits on a half a point, man. Come on.
Really? And the thing that's weird, folks, is this. Like, when this was happening, I get the largest NASDAQ move is up and down. And these aren't the names that you're used to, so I'm trying to figure out even inside the NASDAQ, like what's bringing this down so dramatically. Well, I'll do it this way. I'll bring up.
We had some big sell-offs on the open in some of these stocks, man. Is what happened. They're kind of coming back to normal, but like Amazon was at 32.67.
Yeah.
And we went down to 31.22. We opened at around 32.40. So you dropped $120 in the first half hour of trading in Amazon. Microsoft, Apple, they had some big moves. They're dramatically higher, and they went from dramatically higher to maybe slightly lower. We see Amazon up there doing the most. Cool.
Yeah, no doubt. And we get a couple questions in the den about getting into a couple of these silver stocks, and yes, it is way too late. Like one of them here, we actually have this stock, and I might just move this thing out, man, because this is like Endeavor Silver, folks, just went in 2 days from 278 to 379. I'm worried somewhere about 180 or something. Yeah, I mean, look at that.
Crazy.
Yeah, and then
don't even put a Fibonacci on that, because the retracement will be scary as heck, right? It pulls back, you get that type of move, you give up a ton, man. On you get a 38% pullback. It just went from $1.75 to $4 almost.
Right. It's and this is the launch. I believe this is going to be the launch. Let me just look at this for a second. Okay, so this is heading. This one's I don't know.
Oh.
Yeah, meaning I don't know if I'm going to move it yet. It wants 429 to 595.
I'm watching your chart, and I said,
I know, exactly. This is what ends up happening, folks. It's always tough taking money inside the gold market, but I'm telling you something. You have to take it.
And I have to bring it up. I know you know it. Just for people out there, though, we just talked to Kevin Hinks. We talked to Kevin last week. I think it was one point about scaling. Man, when you get that type of move, there's you scale in maybe a third of a position, half a position. Even if you don't, you can always with this type of volatility, especially. I think it speaks to you hedge some of that variance. That's going on in terms of you can't pick the day, you can't pick the time. So that's a possibility too.
There's no doubt. Gold, folks, we're going for the all-time high, man. I mean, silver's leading the way. I suspect we're going to see it, and we're going to see it a lot sooner than even I expected. And what I mean by that is that you're talking maybe 5-7 days.
Sure.
Yeah, we're right next to it, man.
No, you can't. I mean, that cup formation, man. It's perfectly symmetrical, and it's got $75 to go to complete that cup,
which is nothing. Yeah. Dow Industrials right now up 261. The Nasdaq's down 3. S&Ps are up 15. Stay right there, folks. Tommy and I come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 208, Nasdaq's down 17, S&Ps are off 11.5. And, for a market that, bottom line, had some good juice in it prior to the open. Bottom line is that Asia was up, Europe was up. it's having a hard time holding price out here.
It sure is, man. We just dropped, 10 points in the last 10 minutes almost. A couple stories. It was interesting, right? I was coming on doing the program at 8:30. This was 8:22, so it's coming out, and it's Kevin McCarthy, the House Minority Leader. He's saying don't expect a bill before the end of the month. And the market just, does not react at all to the fact that the House Minority Leader is, not happening before the CARES Act expires. Deal with it almost. Get ready for it. Crazy, man. You had Europe, of course, reaching their deal overnight, so that putting a little bit of a bid in things. Some of the statistics in this, man, did you happen to hear me talking about it this morning?
I did.
The dates on these numbers are just staggering, man. So the EU, and they go over a bunch of numbers, right? When you add it all together, it comes to 1.824 trillion euros. The EU agreed that net debt issuance will end by 2026 and that they will repay all new debt within 38 years.
Yeah. What kind of crystal ball do they have, right?
Hey, listen, it's just, all these countries, man, there's a time to spend things. But when you say that we're not going to pay it off for 40 years, how is that fair to the next generation, man? That's what
And how can you even do the calculation?
It's just,
right?
There's a time and a place. We go back and forth, right? I want stimulus to happen in there, but you got to get things under control too. They're getting a little crazy of the amount of debts we have that have to be repaid at one point. The amount of money we spend just on interest in an environment that's almost interest-free right now. That's what we saw, not to get a little political over all this, but we're running these record deficits coming into COVID at huge full employment. You're not supposed to be doing that, folks. You're supposed to build deficits potentially at times of tough economics, right? You stimulate the economy. When things are going very, very well, then you pay off that debt that you issued during tough times. You don't ramp up debt to all-time highs. This is going on for 20, 30 years now, man. You can say Bush started it by first time ever. We were starting wars and giving out tax cuts. It's not how it happened, man. Of course, Obama, the years you needed all that stimulus, 2008, things are collapsing. Now we have a pandemic. There's always going to be something. So when things are going well, we got to pay
that's the quote. Bang. I think they've got so used to it. There's always going to be something. And I think the market recognizes that nothing is going to change. So if I picture that, if I just go back 30 years, right? 30, 40 years, whatever.
Yeah. Yes.
That was almost unheard of, folks, okay?
Sure.
The battles we're here. There's not battles right now, right out here.
No.
Even between the Republicans and the Democrats, when we get into the nitty-gritty of this bill, you're going to see, my take, they're going to be it's going to end up at a couple trillion, and it's going to be done, And
at some point, it becomes a drag on the economy. This is stimulating things. It's important to keep that engine running, but we're approaching levels that are not encouraging, man, in terms of the amount of debt, the amount of money that we have to spend, taxpayer revenue, just to pay the interest on that debt, and that will become a drain. Percentage-wise of GDP, you can make the case that we're okay right now, but there needs to be a compromise from both parties to get things under control, man. So those numbers, when you look at Europe, man, that they'll repay all the new debt in the next 40 years. It's like, how is that fair to somebody that's born in 20 years? Somebody's going to be born, and when they turn 18, maybe that debt they're claiming will be paid off. But I find that even hard to believe, right?
Right. Well,
anyway,
what they should do is move. That's what you're going to see, because the reality is that the people that do get some education behind them, you basically saying, okay, hold up, where's the balance sheet? If this is it, I get this and I get this, well, guess what? I'm gonna split out of here. So
we got the greatest democracies in the world, the United States of America, and then the EU. So what are you?
Well, you can move from the EU to the United States, and then you can move to the as you move into the United States, make sure that you get into a situation where there's less taxes. New York. I think New York's they got a double-edged sword going here, man. You know what I mean? They got They got the deal with the COVID. They got the deal with the aspect of people that want to live in the city. They want to go out, right?
Sure.
That's why I live in the city. You can't go out now. Yeah. You have a high tax bracket.
Yeah.
And
I have Yeah.
So
I was just going to say, I have friends that live in Brooklyn, right? Great jobs. They're employed. They're a marketing executive, in Wall Street. And I had wondered, it's that market. It's not going away overnight. They're okay, but it's things have changed. It might not be appreciating when you got a nice flat in Brooklyn, because the amount of people, the demand. It's just simple.
It has to do with the demand. Now, my take is that New York will definitely come back, folks. There's only one New York.
Yeah,
okay.
Okay.
But the question always is that do you have 10 or 12 years?
And right, it's like it might be okay, but it would have been a lot better if everybody wasn't working from home and didn't need to be in New York City.
Oh, for sure.
So, yeah.
For sure.
We're very beneficial in Florida. You love to say it. Come on down to Florida, folks. It really is. I mean, the
quality of life is amazing, man. Right.
There's a constant supply of demand, and there's going to be when you have no state taxes and the ability to work remotely anywhere. Some of the most beautiful beaches. We're very fortunate to be where we are with how things played out, which is just accelerated that you can work from anywhere. So choose your state you want to be in.
Right.
Yeah.
Right. So let's go take a look at these S&Ps. They're just teetering here. And, when you've already been up to 3273, folks, we're not that far. I mean, you're only talking about 16 points back. But where you're at is where this went topside last night, at 1:40 in the morning. So you break that. You'd have to get below the, it's only 4 more points, 32.54. You get to 32.54, and it's a whole different ball game, man. And I expect. What was interesting last night is that IBM, that's up $2. It was as high as 132, but they finally got some traction about time inside of the cloud.
Yeah, I saw that. Yeah. I know quite a strong earnings report, right? And big numbers for them. Yeah.
Let's go to Steve in Nashville. Hey, Steve, what's happening, brother?
Hey, iced coffee on me.
Duncan Steve, I like it,
Steve.
Man.
Morning, man.
It's been too hot.
Yeah, hey,
I heard. Hope you both are well there.
You too, man. I heard you guys had temps at like 104. It looked like, feels like temperature, at least in some of those cars.
Exactly.
Did they?
The heat
oh
index,
my God,
It was crazy.
Come on down to Florida. It's only 90.
Yeah, right. Yeah. With 110% humidity.
Well, listen, I heard Larry and Harley were on the other day. That was 115 degrees in Phoenix.
Arizona. Don't pull up a chart of that Arizona weather, man. Watch out.
That's insane.
What's it, Sun Valley, Death Valley?
I always joke about dry heat. A dry heat will burn your freaking lungs out, man,
Well, you hope everybody's drinking something like Coke. I don't know, but that's what I called in was KO.
All right. Yeah, you stay right there. Tommy and I are going to come right back. We'll go over Coca-Cola. They come out with numbers last night. Dow right now is up 256. Nasdaq's down 24. S&Ps are up 15. Come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 249, Nasdaq's down 39, S&Ps are up 13. Nasdaq stocks, folks, they're getting real nervous, man. They're driving those things lower. And as I said a little bit earlier, it's not like one stock. So you got a lot of them going down just incrementally and giving it up. We're talking with our man Steve from New Hampshire, and he wants to talk about Coca-Cola. So he had Coke come out with numbers. Bottom line, I'm surprised actually that Coke's up because their contraction was pretty amazing. Are you looking to buy this or sell it, Steve?
No, actually, I was just looking at it. I noticed pre-COVID it was around 60, round number. Went down to 35 or so, and then it's been hanging around 45, 6, I guess. I'm wondering if it's eventually, because it looks like it did an A to B, and now it's just gone sideways. Might it go to a C or D back to 60-ish?
Yeah, I see this basically going back down to the low end of the consolidation. They opened this up, folks, at 47.52, ran to 47.99. You're at 47.62. The volume's not going to be bad out here today, but you're basically going right into a downdraft of the 17th, where we did, had a decent amount, but I just don't see it, and It's intriguing because now this was different than Pepsi, but what you have here is what the problem is that Coca-Cola has the concessions at more of all the football stadiums, and they came in really with negative numbers versus what they thought they were going to do.
Right, yeah, because it seemed to have lagged the rest, but okay, that's good feedback on that. I appreciate it. Hey, real quick. One more. Speaking of your silver, your EXK, can you take a quick peek at GPL? It's doing the same thing.
GTL?
Great Panther.
George, Paul, Larry.
GPL, Great Panther. Oh, that's good. It's about time that thing took off. Look at this.
And I'm wondering if it might go back to the 120, 25-ish.
Yeah, it's going after 119, I believe. Here, let me just pull it up. I think the 119 is a swing point.
Thanks for taking that extra time there.
Yeah, it is. 119. And it broke. Okay. So this is really cool, man. If you're in Great Panther, folks, this finally broke the downtrend. So on a longer basis, you're talking 228. The first leg is 119. You can see the volume came in. And this is saying, too, by the way, that silver is basically going to either stay here or even go higher. Because what does end up happening, and this is where we want to wrap your head around it fundamentally, silver is a byproduct of gold also. The silver mines have millions of ounces of silver. That's, gold is normally, a good mine is like a couple 100,000, not millions. So when you see a silver going from $11 to $21 in 3 months. Once you're over like $17.45, then they're making money hand over fist, almost every one of them, because $17.45 is still a big number to get production out of the ground when silver's at $11. You know what I'm saying?
Sure.
But once it gets over that, and you can see it in the equities, man. I mean, that's just like in your backyard. All of a sudden, your backyard is exploding with value, equity value. You know?
Yeah. Thank you for your time, both of you. Have a good day there.
Always a pleasure,
too.
man.
Thanks, Steve.
Thanks for calling.
Bye.
Really appreciate it.
Sure.
And folks, as you come over to our website at TFNN, you are going to see right on the front page, first off, our man, Mr. Basil Chapman, he's going to be doing a workshop for his subscribers. This is going to be Thursday, right, Tom?
That's right. Thursday night, man, 4 o'clock, right after your program. Basil always does a great job, man. Basil, he's got a lot to say for his subscribers in there. 90 minutes, 4 till 5:30. So he's going over, will the same chart formations unfold for the second half of 2020, or must we find new patterns? After a successful first half of the year, he's going to be looking at, and I heard him on your program last night. It was a nice interview in terms of what Basil was talking about, what he's going to be going over, why he wants to do it right now. So it should be a great webinar, man. 48 hours, almost 2 days from right now. Thursday night, he'll be in there. And, of course, you can sign up on the front page. New subscribers, 30-day money-back guarantee. And Basil's got a bunch of great archive webinars in there, folks. I lose track of how many, 5, 6 webinars. You gain access to all of it, so you got 30 days to try it out. You can watch all of those webinars, including this one, which will be archived as well. So I'll be in there at 4 o'clock on Thursday, and you can check that on the front page.
And as you're over there, folks, Tommy started a newsletter a week ago yesterday. You can check that out. It's Rocket Equities and Option Report. You just come right over, you hit subscribe. That report, folks, you can be a charter member. So it's $97 a month. The bottom line, until the end of July, which in this particular case is that we're only talking, 9 days or something?
Yeah, right, 10 days.
That's crazy, man.
Welcome to August, man. We're almost there. Time is money, especially, it's crazy. So
to be a charter member, folks, you just hit subscribe. Then in the promo code, you put Rocket. And as you do that, you're going to see you can be a charter member for only $48.50 a month.
You got it.
And
you got it,
that
man.
Also comes with a 30-day money-back guarantee. So the bottom line, you get everything to win, 0 to lose. Check it out for a month. You like it, you can keep it. You don't like it, you can get rid of it. Bottom line, get your money back.
That's right. Perfect.
The dollar. We got to get over to this dollar quick. So the dollar is starting to accelerate even more, folks. This is going to get really wild, man.
400 ticks almost, man. Yeah.
Yeah, you're at the low of the day right now, and we'll see if, in fact, you're going to get some heavy acceleration. So this is, we don't have the volume on it. So realistically, it's hard to tell whether it's an ABC structure down, because what happens, folks, is that you'd have to pass the B point with volume. And the way currencies work, you don't get volume because there's so many different venues where you can do it. But if that's what we got, I believe the 99, 95 for... Yeah, so the next... If it is, that's a 92, A to B equals C to D.
Okay.
The bottom is 94,650. We're going, we finish here, we're going after it, man. And, once currencies love trending, folks. So we've been trending down for a bit, and as the metals market has been trending higher, the trip out here today, look at notes and bonds. Notes and bonds, folks.
I agree. Go ahead.
You get the 10-year up 2 ticks. You get the 30 up 6 ticks. So as all of this is happening, the interest rates are still going down.
Yeah. No real. I mean, the note is just sitting right at 139.15, and it's just comfy right there, almost regardless of what's happening right now, man.
Right.
But it's like, no. We're comfortable at 0.6% for the yield for the 10-year right now.
And I think what the market is picking up here is that the worldwide phenomenon of printing paper or digital money, it's not even paper anymore, folks, it's just digital money. That's what you're looking at, man. And the market's
going to be out there providing super liquidity, keeping rates low, and the market knows that, and there you go.
Yeah, and that's not going to change.
Yeah.
Because now they're on crack, folks, okay?
Right.
You know,
they got the drip of Fed money, man, and they're going to throw a hissy fit if it gets withdrawn.
Oh,
So
could you imagine? Oh,
seriously.
Yeah.
Hey, let's take a look at Snapchat when we get back from the break, because they got earnings this afternoon as well.
Cool. Dow's up at 280, Nasdaq's down 33, S&Ps are up 16. Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that will take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 307, Nasdaq's down 18, S&Ps are up 20, and so Snap is trading right now. Let's see, we're trading 24.85, down 42 cents. They're going to come out after the close. They're going to be looking for 441 million, lose 9 cents. You know what's going to be wild, Tom, is that I wonder, so it'd be cool to kind of try to figure out who would be the plus if TikTok basically gets nailed off the platforms. Do you know what I mean? Hello?
Snapchat. Can you hear me?
Yeah. Okay.
Okay. Snapchat's got to play into that. Facebook, of course, as well. I got up here the Thinkorswim platform. The one-day expected move, man, about $3. So what's that? 12% move after market either way on their numbers. And just this chart, man, I mean, look, it was down to below $8 at the COVID lows.
Yeah.
We're at 24, and if you back things up on a monthly, man, we were down under $5 in December of 18, and we were, about $5 to start 2019 on this stock, man. The Snapchat, I don't know how you monetize it. As I've said, I'm on Snapchat, man. I can't even, I see the ads. Never do I imagine going to them, right? So it's really difficult to see.
So the
it's
ads
kind of
just flash up? How does it work?
Yes, they flash up in between stories.
Okay.
That you're watching people's stories, you're watching their snaps, right? You see an ad in between, swipe up to go to my website, swipe up. That's the deal there. It's swipe up to watch my video. I don't normally swipe up, man, but somebody's swiping up for Snapchat.
Totally.
Find out after the bell.
Stay right there, folks. We got Think or Swim coming up next. Then we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.